Welcome to Gold Silver Pros, where you'll learn the ins and outs of the gold and silver markets. Searching for the best precious metals deal? Our affiliates are of the utmost trust, quality, and highest customer service in the industry. Shop with our trusted partner, �ル𝙊. Access special deals on silver, gold, and platinum through our website or call 307-264-9441.
Hey everybody, this is Rob Keens with 𝙂𝙊𝙇𝘿.com. Just to date this, we're recording it on July 25th, 2022. It is a Monday. I'm here with a returning guest of the program and a good friend of the program, David Smith of the Morgan Report. David, how are you doing today?
Good morning. How are you doing this morning, sir?
I am doing very well. We had the opportunity to go on a mine tour some months back and had a lot of fun looking at Kraken's uranium deposit and had the opportunity to have dinner together. And it was good to do that, David. I always enjoy meeting people and getting their thoughts in person. We just haven't had as many of those opportunities the last couple of years, so I appreciate that. And I appreciate you coming back on the program.
Yeah, it was really enjoyable. You know, we met last year over at the Silver Symposium, and
Yeah,
it'll be in Spokane and end of August.
we did. And you know what? We're going back this year. So, or at least I'm going back. Are you going to be going back to Silver Symposium in Spokane?
I sure hope to be there, and looking forward to it. And so I want to talk a little bit when we get through the actual physical aspect and talk a little bit about a digital back silver gold program we've been working on, David Morgan and I, and others, for about 5 years. And
Okay.
a very interesting interview that we conducted with one of the people that everybody knows about, 𝙎𝙁𝙇𝘿 Griffin, about 3 years ago. And I called it up last night on the internet, and I found, you know, what he had to say 3 years ago does not need to have a word changed about free market economics and how this evolving situation with silver and looking at it different ways is going on, just as relevant today as it was then. And near the end, I can simply give the title, which people can look at their own and go to YouTube and look it up and listen to it. And I think they'll find it to be quite informative.
Yeah, that'd be awesome. I think before we started the recording, you and I had a pretty good conversation over what to do in this market. And I'm going to frame this discussion for people and what we mean before you answer. But essentially what we've had, David, is about 18 months of sideways movement in the metals. I would argue that the metals have held up better this year in the sell-off than just about any other sector, with maybe some small exceptions, certain areas of commercial real estate. But certainly the metals have done better than the rest of the market. But I sense, David, a lot from our viewers and from even a lot of wealthy investors I know, there's some frustration with this market because in light of all the stuff that's happening geopolitically and economically, people are expecting the metals to do better than they are. And it seems to be a period in which people are questioning their thesis. And you were mentioning, you know, before we started recording, hey, sometimes it's good just to stick with it and not make a knee-jerk reaction. And so talk a little bit about that and your theory on that, because I see a lot of questioning going on in the precious metal space right now.
Well, you're right. And, you know, David Morgan has long said this. He said, you're going to either get worn out or scared out. And if there's ever a time when that's true, it's now. It's been so long. So many people have said, I can't take this anymore, or I can't take much anymore. And the only way when you can't take it anymore is to stand aside and listen. And don't try to interpret. Don't try to move the needle by buying another 50 shares of a stock that's gone down a dime, or buying GDX if it's gone down a few basis points or something. And the market will tell you. It'll say, look, this is what I've got in mind. Buy a little bit, hold back, whatever. But don't get blown away. And you and I have seen a lot of mining stories and we've seen a lot of charts where support was broken and things. And it's amazing how many of these operations, silver mines, gold mines, uranium mines, have come so close to finding something and they stopped. There was I won't mention the name, but there was a company the other day I ran into. They had drilled, I don't know, 50 meters. And they said, you know, that's not a lot, but they said, we thought it was here. It's not here. They stopped, and it was very complex and costly drilling. the geo went in, if you can believe this, drilled one more foot, and found the whole darn deposit. So the earth gives us its secrets begrudgingly, and you've got to have that hunger and that thirst and that never say die. You know, Robert Friedland was on his last hole at 𝙎𝙄𝙇𝙍𝙀𝙍 in Mongolia and hit that big copper gold deposit some years ago. Yeah, that was his last hole. So the people that, you know, he who dares wins. That's the SAS motto. And we don't have to be special forces or highly trained to do that. We just have to be curious. We have to be relentless. We have to know the plan. We have to know ourselves and not undercut ourselves, and listen.
And rely, David, not only on the data in your analysis, but also your instincts as an investor. I think that we often underestimate the value of experience in an investment. And if you've got some years under your belt, like you and I both do, a lot of times, you know, our original convictions are correct. The timing of it can be variable depending upon factors we don't control, but the investment thesis can be correct. And what I've learned over the years, David, is that sometimes the panic sets in right before the investment thesis, you know, holds true and you were proven right. But because we lost patience or got distracted by some other shiny object, you know, in the past, I don't know about you, but I've made mistakes in doing things too early, getting out too early, or not sticking with the thesis. So I'm pretty much, as far as precious metals go, I'm pot committed. I mean, I'm not backing out because I believe in the thesis. But what do you say to people that they're looking at this market going, when is it going to kick off? Everything seems to be aligned. You know, we should see upward movement in the metals, especially given the sell-off we've had in most other asset classes this year. But how do people keep their focus? Because there's a lot of impatience right now about what's going on, but I don't see the investment thesis having changed at all.
I don't either. In fact, I've been looking at these things since the early 70s. I've never seen a concurrence of events like this that all could not drive our thesis forward. Not a single one. And any one of them could break the whole thing wide open, you know. And I have a multiple layered approach. I'm constantly listening to people that are the experts that I really feel I look, you know, Rick Rule, Pierre Lassonde, Frank Holmes, and I'm looking at their thesis and I'm learning from it. And sometimes I'll take one little thing and you know, looking at the Pareto principle. What's the stock or what's the metal that would give me the 80% of benefit versus the 20% of commitment, whether that's time, money, or whatever else. And you know, it doesn't have to be a mining stock. It can be a stock. So, for example, I'm not saying that lithium is all done, but I feel that, you know, lithium and nickel have had a run. They may have another one, but I feel that the Pareto principle for me is gold, silver, copper, uranium, and actually uranium in the order before the, you know, the gold, silver, and copper, I believe. But those are the ones. So you know, not too big on cobalt. Sure, it'll go maybe, or graphite, you know, something like that. So I want to pick the 2 or 3 ones that I think have the biggest potential. I learned this from listening to Peter Groskopf over at Sprott. He said the people that make and keep big money tend to buy when others are selling very hard. We know that. We all hear that. But he also said people that make and keep the good money tend to realize that 20% of their picks will yield 80% of the results, and the other 80% of their picks will detract from that. And so that's the talisman for me. And I look at how Eric Sprott looks. Eric, and I know I'm not saying people should do this, but I'm saying it works for him. When he has something that's really going, he adds to it. And there's nothing wrong with taking a free ride, selling half, and you should do that often. But there are times when you have such a high feeling, and you could be wrong, but you may be right, that you shouldn't automatically just knee reflex sell half. Because as one of his managers said, what you end up doing over time is having a stable of losers who sold out all the big names when they were gone, and then they keep going. So, you know, it's a little bit like our grandmother making chocolate chip cookies, where instead of measuring everything out to the nth degree, put a little bit in here, a little bit there, a little bit next time, a little bit less next time. And I would suggest one more thing, which may seem to be heresy, but I would suggest that many people today that are still striving to get more and afraid if they don't buy a bunch more yesterday, they're going to be missing the train. The things you and I are discussing are so asymmetric and they're so unlikely to ever happen twice in an investment lifetime that if you didn't do much more, if you just sat there and waited, you're probably going to get bailed out. You're not going to get left behind. You're going to get left behind if you get knocked out, if you get catatonic, if you can't act, if you ignore a real signal and constantly try to be on the move. You want to be sitting there like Marion Catoosa's alligator with your eyes sticking out of the water, waiting, whatever it takes, have a life, but keep an eye on the edge of the water. And when something comes down to drink, get ready, slide over, and then go for it and don't miss.
You know, David, that reminds me of a principle that I learned in investing a long time ago. I had all these licenses along the way, worked for Forex brokers. So I've traded and bought and hold a lot of stuff, real estate, Forex, stocks, written about it over the years and invested. And one of the things I learned was most of what you should be doing as an investor is research. It shouldn't be activity. If you're spending most of the day trading, in the long run, you're going to lose because eventually, because you have transaction fees and you'll be wrong. And all you're doing is mixing in bad trade with good ones. And what I've learned over the years is to look for those really good generational type trades, or what I call cycle trades, and just stick with them. Get in early and stick with them. And I think 𝙂𝙊𝙇𝘿, who I know that you know and respect, has written about this many times. He wrote a story about an investor who simply stayed with the average bull market every 10 years and rotated in and out. So whether it was stocks, bonds, metals, real estate, and ended up building a $50 million portfolio. And this trader, it wasn't a trader. It was somebody who would study markets, pay attention to the markets, and would simply get in early when everybody else was selling and just hold for years and then sell and do it all over again in the next investment. And it's such low, it requires such little effort from an actual trading perspective. A lot of people don't believe that it could be true because what you're taught is buy now, get in, trade around. And to me, it's the wrong way to invest. The smartest way to invest is to look at those markets in which you can get in early and you believe in your thesis and you hold it. And then when it's time to sell, you sell. And it took me, David, probably 20 years to figure that out, but I'm glad I did because I have a lot less stress and it's a lot less work investing this way, honestly.
Right. And if you've got to be doing something all the time, where's your life, because you can have opportunities to help others, to teach, to donate. And that decade thing is so easy. You know what? I caught the bottom of the March, I think it was 22,000 𝙈. I cut the bottom of that very day, but I didn't stick with it. I didn't have belief that this was a low risk thing, but it was right on the last day. I caught the bottom of the well, I guess you'd call it the top of that 30 some year interest rate thing when it was at 18%. All I had to do was roll a contract, not 30 years, 5 or 10 or 2 or 3. I'd have made more money than you can shake a stick at. And you're right, that trade of the decade is so boring and so profitable. And you know what? Even if you've got a commission-free platform, you're still paying the spread. You're paying getting up in the morning, being there at the market open. You're paying outliers. You're just getting chewed away, chipped away. And there's got to be a simpler way to do it. And there is, and there are people that you and I have never heard of before that do it. And I remember when silver, I think it was 1979, late 79, there was a point there where silver was like $8. It hadn't blown up yet. And then all of a sudden, it went to 18 and then 24 and then 50. I knew a Canadian, I don't know if he's still around or still trading, but he traded from, I think it was $8 to $15, burned up his charts, threw them away, made several $1 million, never went back in the market. You say, well, look at that. It went to 50 and he got it at 18. You know what? He didn't give back a penny. I gave back a lot of money. I learned during my young years how foolish it was to not take a chunk. And so you learn these things, and I hope that people learn it a lot sooner than I did. And I think I got it right at this point. But just please, just stop and think about these things. Think outside the box. Listen to what you say. And I'll tell you something. I respect you so much. I've listened to you many times and watched you, and I love your demeanor. We all have preferences in how people deliver information to us, and your delivery to me is wonderful. It calms me to listen to you. I know when you open your mouth, you've got something to say, and I want to hear it.
Well, I appreciate that, David, and I would say the same thing back in return. You guys have been doing this for so long. You're well respected. Now, the industry that we're in is not the most popular industry, but I think that will change, and I think that's part of that. I have good friends who are venture capitalists and investors, and I'm in all these real estate investment groups, and the same message from people who have been successful investors, and I'm talking people from multimillionaires to billionaires, whether it be Bitcoin, real estate, whatever the case may be. The thing that I get from speaking with all of these people who have been good investors over time is you don't need to make it too complicated. You stick with your thesis and you go with it, and you learn along the way. But the worst thing that you can do is doubt yourself and not see, your investments to their fruition. For example, I'm in a real estate investment group here in Dallas-Fort Worth. They invest in commercial apartment buildings all over Dallas, Nashville, 6 or 7 different markets. They're a highly successful group, and you have to pay to get in, and it's invitation only. And the only reason I'm in that group is because I did real estate for 20 years here in Dallas, and I know the people. But they are an amazing organization of investors, and the program is amazing. And it's simply doing mundane things many times, but then learning to step away and just let the investment do its thing over time. It's the greatest investment lesson I ever learned. And it's true of any market. It doesn't matter which market you're in. And I'm not talking about buy and hold, in your 401k. I don't advocate that, because you don't control that investment. But if you're in an investment in which you believe it has a good investment profile and you've done your research, then you should stick with that investment. And, that has successful people that I interview and that I associate with have always had that same view. Why make things more complicated than they have to be? The financial media will want you to trade in and out because it's where they make their money. It's where the brokers make their money and the banks make their money. But it's not where it's not, in my opinion, where investors should be focused. I know, David, you teased at the beginning of the conversation something from Edward Griffin. Did you want to share that now?
Yeah, we've been working with the cryptographic silver project, digital project. We're now getting ready to source metal to back the AGX and AUX coins, which will be put in vaults around the world that people can use it to spend, to hedge, to hold as insurance, and we're moving forward very rapidly. And I went over last night on YouTube to see something that I thought would be relevant to talk about this for our listeners to go on their own and look. Now the site itself is ag.lode.one. They can go over and look at the whole site for the load, project. But this was an interview that I was fortunate enough to be able to conduct with G. Edward Griffin over in Acapulco, Mexico, about 3 years ago. And we got him over there, and he tried actually downloading it successfully onto a wallet for the first time, the token and the coin. And his discussion, he has such a reputation for being clarity when he talks about free market and talking about, he wrote the book, The Creature from Jekyll Island, and that book is still read and very popular today. But the interview was so wonderful that I wouldn't change a word of it, although it's 3 years old. And I hope people will go over and take a look and see what a wonderful man he is, and the philosophy that he has, and how relevant what our project is to going forward, which we think will bring honest money back into circulation to be used in all sorts of use cases. And this has been a dream of David Morgan, myself, and others for really decades. So I'll just let me call that up now rather than try to find the URL. Just a second. I'll try not to lose you.
Okay. Yeah, and that's important because a lot of, given the current system, David, and how long in the tooth it is, and all the problems that the debt-based fiat money system has created, I think we're all seeing the fruits of that labor, a little over 100 years later, 109 years later. It's pretty darn obvious that system doesn't work. And I've always thought that if you could marry current technology with honest money, which is gold and silver, and do it in such a way that people know that gold and silver is there, and that unit of measurement and that facility will always maintain its value, it's a good idea. To me, the easiest way to solve the money problems are using gold and silver, but layering technology on top of it in a non-fractional reserve way, so that people can gain access to gold and silver without having to carry it around with them and transact without having to carry it around. To me, that's the only improvement you need to make on gold and silver in the modern world, is having a way in which you could facilitate sending value without actually having to fly somewhere and hand people the coins or the bars. And so, any project in which people are trying to do that, and there are some of them out there, it's very important that we look at that. Because I feel as though, David, if we don't develop our own free market solutions, the central banks are going to figure something out and may not necessarily be what we want.
Absolutely, because they do not have our interest at heart. So here's what if you go over to YouTube and do a little searchlight, load Ambassador David Smith interviews G. Edward Griffin at Acapulco, and that was done in 2019. And you'll go over there and just listen to what he has to say, maybe more than once. If you're not impressed, then I'll be surprised. But he's always been a fan of mine, and he's right on the money. So
Yeah.
Good luck on that. And I've written articles recently on the Prospector News and for David Morgan and other outlets. So really a pleasure to be here, Robert. I was really looking forward to this morning, and I certainly have not been disappointed in our interview.
Yeah, I appreciate that. I do have one last quick question for you, David, if you have a moment.
Sure.
On the program last week, we had a roundtable with Dave Kranzler, Chris Marcus, and Andy Schechtman from Miles Franklin. Andy, right off the bat, Dave mentioned this and Andy talked about it. There was I believe, a 50 million order from a billionaire, a lady here in Texas. Certainly we have a lot of those. I have one that lives not too far from me, owns a lot of land. But she had made this really big order, I think something like 900,000 American Eagles and the rest in gold. And that's a pretty big order. And it doesn't surprise me at all, David, that we're now starting to see orders of that size, because I think that the big money is starting to see, and I'm talking about big individual money, not corporate money, but the big individual money, the moneyed families are starting to see, and they're starting to take positions if they haven't already. What's your view on this? Is this an anomaly, that type of order, or do you expect that more people that have money to protect and assets to protect are going to start using precious metals more as we go forward?
I do not think it's an anomaly. If it is, it's only because it's the first monster that we know about. But I used to, well, I still do, but I did listen to. I'm trying to think of the individual that lives in. He worked with Soros in the early days. He made that break the bank order. He lives in Singapore now. Roger, what is it? I can't think of his name. Sorry, should know it. But anyway, he made the comment. He said, well, first of all, this market that you and I are discussing is so tiny that for hundreds of, centimillionaires, let alone billionaires, it's a rounding error to buy the whole darn market. So we're not talking much. But anyway, he said, I wait until there's an opportunity that is so easy that all I have to do is go over in the corner and pick up the money. And I think that's where we're on the cusp of that right now. Go over and pick up some of this money. And it's not going to be, there's not going to be 3 of these chances. There's going to be 2. This is the second chance. David and I wrote the book, How to Make and Keep Big Money During the Coming Gold and Silver Shockwave. Second chance. It's going to happen. And if you're watching, you're not going to be involved. So I agree with you. I think it's going to catch. And when it does, it'll be a whirlwind. And they're not going to telegraph all this beforehand. They're just going to do it. And then you and I are going to say, well, what happened?
Yeah, and it's going to be after the fact. And everybody's going to say, oh, yeah, that made sense, after the fact. But you don't want to be in that position.
Absolutely.
So I kind of lied, David. There's actually one more question I wanted to ask you. It's because of something you said earlier, real quickly. And I know you have to go, but you mentioned that you've been investing for a long time and you've been in different markets. This is the first market you've seen that basically was screaming gold and silver bull market, from a lot of directions. I want to elaborate on that just a little bit. You've seen previous bull markets. What were those like, and how is this different? Is this different to you, or does it have the same feel?
Well, it's funny. I don't know if you have two or three. If we don't, we can do it again. But I'm going to write an article very soon here about how to stay in and not get blown out. Because here's what's going to happen. There's a chart that I have discussed a few times before that I think these spike markets that Dave Forrest talks about and these super spikes and other people discuss this are going to play out in these different metals, not necessarily, boom, 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 but some they'll overlap, some they'll be concurrent, but they're all going to go the same way in the way they explode and the way they collapse and the way they come back. And I believe that there will be people that will make and take a huge chunk out during the explosive phase, and then they'll be deprived of a lot of that because they stay too long or because they think the thesis will last longer than it does. All investment theses eventually become false because they fulfill the original expectations and then some, and the people that hang around just get slaughtered over time. Some of them hang around for years later, and they work so hard to get what you and I are talking about, and the market will take it back. If you keep it in there, it will take you out quickly or slowly, but it will drain you out. And I don't want to see people do that. So I'm going to write about that and maybe even have a chance to talk with you about it for 5 or 6 minutes at some point. And down the line here, I'll be happy to do that. We can make it a short, just deal with that. But I believe fervently that it's something I want to transmit to people and get them to thinking. And I think they can surmount it so that they are at the winner's table and they don't sit there and say, well, I made some money, but I gave 90% back. It does not have to be that way, but you have to understand a couple of things and bury them deeply in your practice and your psyche and your plan carrying out to avoid it. And everyone listening to this can do it with a little bit of self-discipline, humility, and being willing to listen.
Thank you so much, David. If they want to read that piece that you're going to have out here pretty soon, where do they go? How do they contact you?
I haven't written it yet, but it's in my brain, but I'm going to put it together in the next week or two.
Okay. But do they go to the Morgan Report, or how would they get that information?
I think I will probably be putting it through. I'm not sure where I'll put it. I might put it through Prospector News, and I might do it through Money Metals. Not just sure yet, but I'm going to try to get it out there through several sources. So
awesome. Well, good. We look forward to that, David. Again, David Smith of Morgan Report. Thank you so much for joining the program. Appreciate having you on. And definitely let's touch base again before we get out to Washington.
Absolutely, Robert. Have a great day.
All right. Thank you so much, David.